Is bad news the new good news? Well, it turns out that weaker than expected jobs data fueled some optimism in markets. And in fact, we actually booked the biggest day over the last 3 months. Hello, ladies and gentlemen, and welcome back to the Daily Show where we discuss stocks, commodities, and cryptos. Today, we need to talk about a few things. Will this continue, the trend of weak economic data pushing us to new all-time highs? And also, on top of that, what's going on with crypto? It turns out that we've got a new approval for a Bitcoin ETF. Will this lead to some massive rallies across the crypto sphere into the next halving cycle? Today we discuss the 61.8 golden fib that we just hit on the S&P 500, the breakout in general and breakdown of yields after that weaker than expected jobs numbers ahead of the big non-farm payrolls this Friday, and of course Apple's rise and breakthrough. Well, welcome back everyone to the Daily Show where we discuss markets around the world. If you like anything to do with macro, leading indicators, and hottest charts, then this is your place. Make sure to subscribe and smash that like button. We'll be talking about everything coming up, including the key levels that we need to be watching. But let's discuss rotation, because what happened over the last 24 hours was a pretty broad-based buy-up. And specifically, we saw stocks like Tesla take out their highs, Apple break through new levels, and on top of that, it was semiconductors across the board. Will it hold? We'll look at that later on. But let's discuss the JOLTS job openings. Basically, it was weaker than expected. And this usually means that we're about to see a very important non-farm payrolls. Make sure to stick around this week because this Friday, just before the market opens, we're going to have an incredibly volatile event. This number has already shown you how volatile unemployment is expected. Do also remember that if we see unemployment start to rise, that is getting weaker, we usually are only a few months away at that point from an actual economic recession. We'll talk about that and more later on throughout the week, but let's discuss US 2-year yields. This is where everyone was looking. We went from that 5% and even higher percentages on some of the other yields to 4.9. Basically, we saw the yield curve expect more rate cuts in the future, and the market liked this, specifically in gamma stocks. Speaking of gamma, we saw a gamma flip, and take a look at this. We went from negative only a little while ago to positive. Does this really mark in a new sign of positivity? Was that all we got for August and September, or are we still going to see a bit of a sideways market action? I think we're going to see sideways to down, but we'll have to look at some of the key levels later on today. And of course, the big thing here was that it broke some of our key zones. If you had to ask me 24 hours ago, what would I think? I'd say Apple looks bullish, semiconductors looked okay, but of course the stock market, the S&P 500 and NASDAQ, were at critical bear resistance levels. Throughout the whole session, all that happened was we saw buying. And this could have been because of the CTA positioning, which did flip up over the last week. And this is what happened with that gamma flip. So we have seen some purchasing from the CTAs that did come through into the markets. Is it a relief rally? Is it real? Again, we need to look at the charts later on. What direction does everybody else think it was? Well, of course, people started to turn bearish. We hit that first target that we talked about, which is 436 on the SPY, the S&P 500. And effectively, when everyone else is turning bearish, you need to think, well, that could be all we get. I still think it's possible to fall lower, and we'll discuss that later on today. But first up, what does this bring our stats to? We'll update this with Wayne. Wayne will update it, I'm sure, and then we'll bring it to your attention. And basically, this is the August stats. So now they're nowhere near as negative as they were at the start of the week. They were negative 3.99. In such situations as this, we tended to see a relatively okay September, a possibly weak October, and November and December were usually very good. In all situations, though, as we said, during this sell-off so far, it's been unfortunately a buy the dip style scenario. For some bears, they're not going to like hearing that. And the reason is quite simply because we know that we have a 100% track record from statistics alone. Is that enough to go off? No, but it's something that we are looking at. This is about a week out of date now, so we're basically finding ourselves into this area here where we're seeing a bit of a rally. It could be maybe the August to September rally coming early, but we do usually see a double dipping event somewhere around the back end of September into October during pre-election years. And we've talked about this versus all years, and you'll notice that usually September is the weakest month. So is this a relief into the weakest month of the year being September into October? This is just going to be a volatile time. And of course, it brings in this idea that we need to be very much price dependent. And over the last 24 hours, we saw a huge switch in markets that then pushed all the way to the next targets within the same session themselves. Do we usually expect volatility to spike during this time? Absolutely, we do. I guess you are seeing volatility spike because, of course, we're getting large moves again on the markets. The only difference is we're not seeing it in the traditional format. Usually the VIX spikes up. Well, that's not happening at this stage. Before we get into the dark pool liquidity transactions and obviously where there was a wrong transaction over the last 24 hours, we just need to discuss real assets versus financial assets. A lot of people are still betting on the idea that iron ore and gold and other metals might be in their time to shine. If we do have higher rates for longer and we go into stagflation, remember commodities and gold do tend to do better. Also, of course, equity risk premium. I hate to harp on about it and talk about it all the time, but it is something that we should be considering as a longer term investor. Just basically as you need to be cautious in markets. And of course, that's why we're seeing so many people chasing the bonds at this stage. Let's talk about the failures before we talk about the possibilities, okay? And the first one here has got to be that dark pool transaction that we saw on both the TQQQ, which technically is a buy, and the SQQQ. So we saw what we thought was probably going to be a seller, and it turns out it was probably a buyer. They are sneaky, these people. I think on average, I wouldn't really change much. And I think this is important, something we maybe don't do and a lot of people don't do on YouTube, which is go back over and say, well, could we have learnt something from this situation? I think on average, this particular position, if you had usually shorted around here, there was a couple of things that you could have done. We'll look at that on the technical charts as we go through today's session. But this was a large dark pool transaction. It turns out it could have been a buy. Let's also take a look at the SQQQ. We can see it in this position again. Maybe that was a take profit on the SQQQ after some nice action. Maybe they were wrong and they didn't expect the jobs numbers to be the way they were. That was a hard move out of that. Maybe literally they lost, or at least they're losing at this position so far. This was the one that definitely was really, really good. And that was, of course, Apple on the pullback getting a large transaction. At the moment, they're in a very good position. And we have talked about how Apple has positioned bullish, semiconductors have, and then, of course, the stock market was positioning both bullish and bearish, which made it kind of difficult to read. Again, we'll look at it on the charts. Where we have seen some nice transactions recently have been gold. So gold trusts across the board, ETFs, gold stocks, all of these types of things, they're getting quite a lot of trade activity on them. We saw Morgan Stanley mention gold again, and that's an interesting thing. If we do believe that we've just put in the rate hike highs and we're going to start seeing cuts, gold's usually a pretty good thing during cuts. It also could be a pretty good metal during stagflation. So it's at an attractive price still on the markets, but from a trader's perspective, it's not maybe as easy as anything else. It's really as an investor, I think that you're looking at it more than anything else at this stage. S&P 500 SPY, these are the last 10 largest trades. We did get a large trade near the close, and that means that we're kind of at that resistance. And we talked about this level. It also marks out a 61.8 fib on the high to the low. We know it's been a traded level before. We've seen dark pool transactions. We've seen large transactions. We've seen sell-offs. We've obviously seen buys. So it's what we call a defended zone. This is an area of extreme importance to really the bears getting any kind of follow through here on markets. And it's something that we will be looking at. Now, it also is important that if you like what you're seeing so far in this video, that you go and check us out on X. Follow the links in the description down below because we do talk about a lot of those things over there. And I will be posting a bunch of data. I'm just working on getting a few little kind of proprietary things set up so that you can view them every week as we post them through on our X account. Yes, I've started calling it the right thing now. It's not Twitter anymore, is it? I can't believe the name. Anyway, let's go over to the wonderful world of gambling. I mean, options, yeah? And let's have a look at what's going on in the world of options. And it is some interesting trades going through here. Relative to 90-day trade volume, it was a pretty decent session for things like Tesla, Nvidia, and of course we saw also a new account, Home Depot. Look at this one, 2.49 times average volume. We've also seen, quite a lot of over standard averages. Goldman Sachs also coming through with a 2.88 times, and take a look at those calls. Massive call volume, just absolutely obliterating on that one. As we scroll down, we can go over to 53% calls and 47% puts on actually what turned out to be an average day, but there were some large trades within the individual stocks. Now let's go to rotation. So rotation, did it show us anything? Not really. The most smashed sectors came back the most, which was TAN and clean energy. Semiconductors did a nice day. Consumer discretionary did a nice day. Metals did a nice day. I think a lot of that has to do with this back-end liquidity coming in from China. And I'll share that chart over on Twitter or X so that we can see it. And basically, it just shows you liquidity is starting to come back into the market. They're basically injecting and injecting and injecting behind the scenes. They're doing little things to try to buoy that market, and it's happening right at the lows that we'll watch later on. 5-day average has been relatively bullish on markets. Again, the most beaten sectors are doing the best. Gold is the standout over the last 5 days. GDX really getting some recovery after selling brutally over the last couple of weeks. Let's discuss yields as we get into the charts before we go into individual stocks, commodities, and indices. And yields did get crushed. We see the 2-year there. We see the 10-year, the 20-year. All of these types of ones are important. Do start to watch as well US 02Y versus US 10Y, which is the combo that most people look at for recessions. What you're looking at is a combo here. You would like to see maybe unemployment start to spike. That is, the economy is technically getting weaker. The Fed is doing its job of what it's trying to do. And then we see this go underneath 1%. If that goes underneath 1%, that's when we need to be thinking about recession is on the table. Problems are about to occur. Just remember, that is one of the most key things that we need to be looking at. Everyone's jumping on treasuries. I don't think anyone's not talking about these things right now. It's an obvious one. Everyone can see the support and everybody can see that this is a potentially good investment zone. I don't disagree. Of course, I've talked about treasuries for a while at this point, and I've talked about them here and I've talked about them here. Now, have we actually seen a trading turn? Well, I don't think so yet. So although treasuries looks incredible, and of course you could say, well, that's the V. Yeah, it's not too bad, but I do want it above 97.38. Once that happens, I think pullbacks will be met by buy demand, and it's likely we've seen the low on treasuries during this cycle, okay? We are getting near cyclical lows, potentially near these points. So I don't know if we can call that yet, but maybe we'll be able to say that in the future. And it kind of reminds me a little bit of what we saw on things like natural gas a little while ago. The volatility of the volatility. We've talked about the crush, and my goodness, it gets more ridiculous by the day. This marked the difference of the end of the March lows, and of course, it could be marking it right now. That was a pretty aggressive move on the markets to a bad number. Non-farm payrolls will probably solidify whatever's going to happen, but we are at the last point for the bears. 61.8 around this area is usually a pretty key zone. The volatility is bad. The other reason we say the similar thing is because look what's happened. We've gone down below the 20 moving average to a point where we usually see bulls start to pick up. We hit our first target, which is 436. We talked about if we go through the 43.30 zone, that we're probably going towards 4,200, 4,150. I do think a lot of people was talking about that. It seems like everyone on Twitter was, or X was. And so I still can't get that name. And over here, we have an interesting point. During other pullbacks, we usually do see a rally. And that rally does show up on stocks above 20-day moving average. So we've seen this rally now. It can't sustain. If this thing gets back above something like a 55 or a 60, usually that's it. So if you think about all these other sell-offs that have happened, so we go back through previous history points, here's January. Of course, we dump off there into March. We see that one initial rally, which goes to 44. And then, of course, we see the relief, the proper relief. If we think about the August sell-off last year, we sold off. We had one nice big rally because, of course, that's usually symptomatic of it. Then we sold off again. So I do think that that's interesting and something that we should be looking at here. Let's look at the skew. Did the skew go up? Yes, it wasn't getting crushed again. So probably a good sign for the bulls there, at least initially. However, the skew is lower. But yeah, you're looking for crush. Copper also broke above. And if we have a look at FEF2, which is basically FE, one second, guys, iron ore. I'm just adding this on. FEF should be 2. There we go. You can see here that it's got a lot of inside days. So basically, the copper and the iron ore, they're holding. They're betting on some kind of Chinese stimulus coming. If everything was as bad as the newspapers would make you think, then how are these prices holding up? And that's why I say sometimes price action is better guide than the limited information that we have. Let's go over to dollar. Now, I thought dollar would stay within the long leg doji range. It didn't. It fell down. And it actually broke below this area, giving us, kind of cause to say that we probably said the top for dollar at this stage, unless yields go ballistic due to some weird unemployment numbers being hot. We already know what the reaction theoretically will be to weaker numbers, and that'll be probably a selling of yields. And we'll also see some kind of probably shenanigans on the dollar. So we're kind of expecting now a rally into a sell. We have seen a change of trend from that aspect. For a swing trader, they're going to need to go back below 102.94, and that will be, a huge kind of positional sell, I believe, on markets. It'll be a big rotation, but it's all happening at the previous highs. So it makes sense. I do think we'll get a bit of a relief rally here, which might lead into a little bit of weakness on the markets, at least a little bit of a pullback. We'll see whether it can get bigger. And this zone up here is going to be important. So I've marked out 103.91 as a level I'm looking at. Gold loved the fact that dollar was weakening, and of course it broke through. We had our suspicions this daily 20 wouldn't hold after it kept failing at the same zone. I do think gold can maybe make it a little bit higher now, possibly up to 1960. This is a fairly impressive run from gold after going down quite weakly. I would have definitely thought once this happened, because we were in that descending channel, that if we kept holding that, we were probably going into this box down here, 1850. But yeah, gold is pushing a bit higher here. Got through that daily. We were definitely confused over the last 24 hours, and that's what ended up causing it. Let's have a look at GDX. Is it through the pain yet? So this is gold stocks, the ETF, or GLD or IAU or whatever else. No, it's not quite there yet. We need a 2980 plus print. Once we do that, we probably are solidifying that gold has just posted a low for now, and swing traders can start to think about getting involved in that market. What about oil? Oil is right at where we expect it to find some resistance. Maybe it won't this time, but it's right at that daily 20. We're looking for potential weakness on the smaller timeframes there. Tesla blew the hat off. Like, we saw weakness here, and we thought maybe there could be follow through. There was none. This thing did not show any follow through. That would have been sweet. Follow through trade, get back down to 200. We seem to be off by, I remember originally we were talking about 200, 210, and this stock, it just doesn't quite giving the right level. It gives 212, 46, then island reversals away, and it is obviously blitzing it. I do think that if it keeps going up, let's say we go up another $10-ish, we're going to be coming into some troubles around this area in here. And that makes sense. This is where we saw a lot of trade on the way down. So somewhere around that 260 could be starting to cause problems for Tesla. And I think some people will take profit on it at that point. ARK was much easier. This was exactly where we expected buyers to show some support. It ended up going up 5.43%. So ARK had a good session. Hypergrowth stocks had a great session. They all did really well. And it does make sense based on this. It's pretty good technical zone. Of course, investors might like that level quite a lot. Let's have a look at semiconductors. Now, this was an interesting one. I was definitely in two minds. I've been talking about weakness on semiconductors due to the double top for a while. And then we saw this, which gave me the idea that there was probably some strength. And I'm still convoluted. I'm break even on any longs here at this point. And I do think that there is a possibility shorters could recommence on semiconductors. It's a very tough area for it. Now, Apple looks a lot better. I mean, this is a breakout. I actually broke even this trade again into the market open in the previous session. I said that to the private community, free 7-day trial if you're interested. And basically I just said that this level here, it just was confusing to me. Whether we could make cases for short, we could make cases for longs. So previously, so therefore we have to break even the trade. We have to make sure that we're protected on both ends, especially if we have a sell. Now, some sells lost over the last 24 hours, there's no doubt. Some buys obviously had a great session. So how much higher could we go? Is it possible to get to a 61.8 or 188 return? It is possible. It really comes down to the index, and we'll look at the charts in just a moment for that. CQQQ puts in the right shoulder at this stage. This is thanks to stimulus out of China. You can see here, the Hong Kong 50, really anything is starting to look pretty good on the market. So if you look at the Hong Kong 50, again, very decent little pickup that's happened recently off this. And these have all been sold off aggressively. On one hand, you're hearing everyone's taking all their flows out, but there are some reports showing that actually some of the big traders are investing into it. So who are you going to go with, the big traders or the reports in the news? Hey, I'm just saying there's interesting facts there. Of course, proceed with your own risks. You've got to consider it, all that type of stuff. It's very important that you understand that is still a very risky market to go into. German 40, we had our suspicions this was questionable. Obviously, we knew that the US market would end up pushing it. And while the first initial sell was a beauty, when it came back up here, we had to question everything. It could still be in an overall Wyckoff, but this is certainly a very good flush by the market. And this area in here is, very, very tough. Is it a double bottom now that's going to have pullbacks into longs? At least that's the way you might have to look at it. I think with the German market, we'll just have to wait and see based on the American market. The Australian market has done incredibly well. Since the last video, not only did we take this high, we then closed and then we pushed to the world's the most traded zone. That's a pretty significant move. And the Australian market, just broke out. Like it feels like a pretty strong 48 hours here. 2% into the most traded zone. Again, we're hitting a crit here. And all the markets just went straight to the next levels. I mean, there was no ability for me to even make a video in between the last 24 hours to get to some of these zones. You can see here the US 2000 broke out above, showing that pullback's probably going to be met by buy demand at this point. Looking at 1923, previous like little bit of kind of structure inside the smaller timeframes. But I think the most interesting thing here is the Qs and everything else. So we talked about, a lot of people have been mentioning the head and shoulders. I knew people would see it. So this is the left shoulder, head, right shoulder. It's still technically alive and well. I mean, it's better to usually have a right shoulder that's lower, showing that the market wants to show commitment towards the weakness. That's not happening at this stage. It was a pretty strong pick. And look, we did know that buyers were commencing around this area. We had a feeling that there could be sellers here, and it just didn't work out. Sometimes that happens. Unfortunately, it sucks, but it is what it is. Let's look at it in a little bit more detail. We had a critical level. Well, I would say yes, we are. We already know it sold once here. It's now above that level. This is still within the structural zone, though, that we've talked about before. S&P will show it more clearly. But basically, we knew there were buyers here, and we thought there were sellers here. And I still stick with that as being the main cases. Buyers here, sellers there. It's not so much about understanding exactly what's going to happen every single day. It's about knowing when you have edge. Would I think we have edge at that point towards shorts? Yes. There are other ways to do it. One way you could do it is you could wait till it makes a low underneath the previous sessions. Once that happens, you're triggering effectively a reverse V, and that then can give you better probability and stats and odds. So it's all about, knowing your risk, knowing your reps. Do a reps. I say this to a lot of people in privates. I always say you got to do 40 trades of the same system. Until you do that, you don't really understand whether you have edge. Are you going to lose as a trader? Hell yes. Anyone that says they win all the time, well, they could be just a long-term buyer and hodler, and they hodl it for 10 years and then they sell it off. But in general, people will lose, people will win. And in this case, the buyers have won and they've pushed it to these levels. Let's have a look at the US 500 now. And I'll actually go back to the chart here just to show the SPX. So again, does this look like a head and shoulders? Not so much anymore. We still have a gap fill that's there, by the way. That gap fill is still there. But we've hit the 61.8 and we're trading around that in the current futures action. So this level is really the last case. I mean, we blitzed this zone. We thought it would then go here. It just kept going and going and going. And now we hit it straight away after that. That was a big move on the US 500. No doubt it was pretty impressive. But was it too fast, too quick? Is it symbolic of false rallies? Well, it's possibly there. If I was someone that had bought down here, I probably wouldn't be too worried about it. And I'd just be targeting my zones, breaking even in my trades and saying, well, this was great. Thank you very much. However, as a seller or somebody that's trying to enter into this market right now, it's generally better to do something like this and buy that type of thing because that would be more significant, more statistical. It's also important to note that we are at that critical zone. So look, if you miss one, you come from an abundance mindset, you move to the next level. So are we at resistance? Yes, we technically are. Have we got any structural zone here? Absolutely not. Do we have any turn points? No, we've got absolutely nothing. It's just a vertical. So unfortunately, the only way, just like we said in the previous session, if we got below 44.07, we were super feeling bearish. At this point is to get below that structure that we created before the market opened the previous session. So we're going to need to get below that to really signify, at least at this stage, the sellers are back in control. Otherwise, it's buyers territory. And at this point, it's kind of like a point where you'd say, well, if you were a buyer, maybe you're taking some profit around here or at least breaking even your trade. Let's talk about Bitcoin, ETF. I think it's pretty good news, actually. And of course, the market loved it. And it was like, yeah. And it went straight to the most traded zone, smashed it, and then, of course, started reducing. So that is a big coil turn. And it, of course, is in the vicinity of over 8% when you look from bottom to top. And it shows pretty strong kind of action here when that eventually gets in. The one thing I always love about crypto is how fast the reactions are. there's no chance unless you're pretty much somebody that just like snaps in straight away or predicts stuff. Look at this. This thing is crazy and it goes so quickly. And if we go to like a 3-minute chart, you'll see how fast it chunks. So it's like 3, 3, 3, 3, 3, boom, 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 and it's through. So it very, very quick. It always goes like this. Would I buy or sell it here? I wouldn't probably do anything. That was excellent if you'd positioned already for it. If I was guessing the next direction, I think this will slowly fade off because usually that type of news doesn't hold true. And remember, we've seen a lot of the times here with Bitcoin that it does tend to weaken into the end of the year during non-halving year and strengthen into the next year. So we actually already made a video on that. We'll keep talking about it in the future. So this is where the damage was done. Jolt's job openings, 8.83 versus 9.49. At least that's what we're led to believe. It could just be the market wanted to flush people, which it did a good job at. Now we get ADP non-farm employment change. Suddenly this matters a little bit more than it usually does. 8:15 New York time, we need to be watching that one. That's probably going to move this market around a fair bit. Then we scroll down to core PCE price index, which is on Thursday at 8:30 a.m. and unemployment claims. But really the big number is now non-farm payroll change. We expect a 169 number. We expect unemployment to remain at 3.5. It turns out that at the moment, the market's claiming bad news is good news. So if we see slowdown and it's worse than these numbers and unemployment starts spiking, could it be that yields just drop off a cliff and the market goes ballistic? At least that's what it's telling us right now. But I think that even trying to interpret it that way could be quite difficult. So yeah, all I can say is volatility is coming and non-farm payrolls is certainly going to be important this week. Check it out, guys. Make sure to subscribe if you enjoyed today's content. And do remember as well, we have a Vegas conference coming up. We've got ex-Goldman Sachs traders there. We have CMT traders there. We have people that literally are specialists in certain indicators, anchored VWAP, all sorts of things. It's going to be a great event. We're doing it on the 23rd and 24th. Links in the description down below, the link tree there. And of course, if you want to join us, you can. I love to meet all of you. And we will be hanging around as well for the 25th, just for a bit of a chat, have a good time, and meet members of the community. Trading can be pretty lonely. We're here together, always watching these charts and focusing on them, learning from each other and all those types of things. But if you want to experience, maybe meeting up with people that have like minds, it's always great to find people in the hobby that turns into, of course, a profession. There's some experts here and they've made it certainly quite good over the last decades. Thanks so much. Bye for now.